Hey folks, Dan Frio here with your market close for February 6th, 2025. So mortgage rates, they skyrocketed today. No, they just went up one tick. Basically, the market was flat. It was up and down. I'll show you that in here in a second. So what we're going to talk about in today's news, obviously, we're going to talk about rates. But the first thing here is CoreLogic saying home prices are still increasing, and this is driving some people nuts. A lot of people have been waiting on the sidelines for a pullback in prices, and I've been telling you guys, there's a shortage of homes. So as soon as a house hits the market, they're selling quick. So we're going to talk briefly about that. Regulation things are coming back right now, hitting the forefront on banks. It's going to pull back some of the regulations, not going to get crazy, but a lot of banking laws and regulations right now are really out of control. So that's also on the agenda for today, but the news and what's to come. So here's what happened today. And there's, like I said, the market was basically flat. There's the bond market. I'll just give you a precursor of that, but let's get over to here. So today what we saw is continued jobless claims and initial jobless claims. Basically everything came right in basically where it was expected. Okay, so now here's what the big information coming out tomorrow. Okay, so we had the Federal Reserve, the things that they monitor is inflation. Okay, we've got that data over the last 2 weeks. We had CPI, PCE, PPI, and all these other things come in, and they were right in check. Okay, so now the other piece of the equation that's going to come out tomorrow is right through here, and this is the jobs, the unemployment rate. So a lot of people thought the unemployment rate would get to about 4.5 to 5. But it's staying sticky, way down there at about the 4.1 range. So we're going to stay if it stays sticky there. That's telling the Fed, okay, the job market's okay. So then we also saw wage growth. If you watched my video yesterday, you saw wage than inflation. So we got a lot of things pointing toward the positive that we're seeing right through here. So that's the main piece of the equation that we're going to see tomorrow is average hourly earnings is also going to come in. So basically all the data on jobs, how many people are getting jobs, how many people are out of work, and then the jobs that are there, how much people are they making more? The consensus has it's about, like you're seeing right through there, about 4% if you stayed at your job, and if you were a job mover, you got an increase of about 6%. So inflation's, let's say it's about 3% right now. So you're increasing, a little bit more than inflation. So at least you're keeping up, your dollars keeping up on track there. Okay, so let's get to this. Here's where mortgage rates did for the day. They ticked up one tick, so nothing really to surprise about. I said maybe yesterday that there might be some profit taking. That might be what happened today because we really had nothing, no news affecting things. CoreLogic come in and they're saying year over year, home prices are still going up. Yes, up on average 3.4% year over year. I said 2024 was going to be a complete flat year. And my consensus, basically, I'll say 3.4% up. I'll take that better than zero, but I wasn't calling a crash. So that was for the year ending 2024, and home prices were up 3.4%. So I did pretty good on that front. Okay, so another piece of the puzzle is a lot of people are saying, interest rates, why are they staying so high, so sticky, so everything else? There's a lot of banking regulation that's taking place that banks have to, we have to cover our butts and have more profits. Not more profits, more money in the coffers. So in case like that. So that doesn't happen, maybe a couple times in history possibly, but bank regulations over the last several years has really restricted banks. And I think a lot of the regulations being pulled out is going to just help the banking sector, which then opens up more money and cheaper money for people out there. So that's also one of the things on the agenda. So that's all that we're having so far right now with the economic calendar. That's what we're going to look at for tomorrow. So here's what happened today in rates. There's really not, like I said, there's not much news out there. So let's just go to a one-day chart. This is a two-day chart. And I said there's probably going to be profit margins. So here's what happened today. Markets opened and they ended up, well, if you look from here to here, but on the day, they were down 3 ticks. If you go over to a 2-day, this is, we're back to where we are 2 days ago. But here's what I was saying just a couple of days ago. I said, there's going to be some profit taking way up here. And that's why I was saying, it might be a good time to lock in. That's why I even did those videos, might be a good time to refinance. And then you saw rates come. When this goes down, folks, that means mortgage rates are going up, mortgage rates are going down. So when we saw this huge move through here, this is a 5-day chart. When I saw this big move, I'm like, okay, people are going to start taking some profits. So we were locking in or requesting or having a lot of people, locking in right through here. And then that was good, perfect timing because prices deteriorated a little bit. So we called it good right through there at that peak. And I knew, like I said, there's not a lot of data coming in until tomorrow. And tomorrow's we're going to get the official unemployment rate from the federal government. So that will be, hopefully it's right in line. Here's what's expected. We'll go down through here. Average hourly earnings, they're supposed to go up 0.3, and then year over year about 3.5, 3.6. So that's not going to be a game changer there, but non-farm payrolls, we're going to see last reading was 256,000. They're expecting it to drop. GDP payroll numbers, just so you know, they underestimated some of the numbers, and they had a revision of about 50 or 60,000, if I recall. So I'm going to be on the front that I don't think the job market's going to be that bad. The numbers that they're showing, I'm going to say they're going to be a little bit better, but not enough to really move the markets for tomorrow. So that's my thoughts there. So this is what we're seeing right through here. So like I said, there was going to be some profit taking. I was locking in on my clients right through here, and then the market deteriorated a little bit, but you didn't really miss much there. Okay, so let's go over to the equity markets. Kind of nothing there as well. We saw the Dow Jones down 100. In today's market, that really isn't that much. The S&P up 22, NASDAQ up 99, Russell 2000. So basically across the board, let's just say it's flat. The VIX is down just a little bit, telling us the anxiety levels on Wall Street are okay right now. Cryptocurrencies are getting hammered. They're at 96,000. This was about 106 about a week or so ago. Let's get over to oil and see if oil is unchanged. So a lot of good news, folks, in the markets that we're seeing right through here. So why do you guys might ask, well, Dan, why do you do these of these videos, folks, is I'm a mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico, but I'm also a mortgage broker. Okay, let me explain to you guys what I do. And the reason why I do these videos is to help you guys understand the real estate market and when it's a good, how do you buy a house? When you do this, how does interest rates work and everything else? So our goal here is this. Here's our slogan, and then I'll explain it to you. We say here, it's one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how do we do this? Well, I work at a bank that's federally chartered. So that means I'm licensed in all 50 states as well as Puerto Rico. The cool thing about us is, and there's only a couple of these banks in the whole country, we're also a large mortgage broker. Today, all the lenders that I'm set up with. So I'm set up with currently 30 different lenders. So let me put that in perspective to you, and let me explain to you why I say it's one application, one credit pool, and we're going to shop your loan. So here's what you do. You put in your application with us. We pull your credit. Instead of you doing that to 5, 6, 7 other banks. Now, if your goal is just you want the lowest rate possible in the whole wide country, I might not be your pick for you. The reason being is my goal is to help those that are really looking to buy that first house and partner with somebody to say, Dan, I really need your help. I want you to guide me through from step A to basically when I walk in that door. And that's what I'm here for. So I usually work with about 10 clients a month. Love to work with you. So I'll give you all my information at the end of this video. But that's what I do for a living. So when I come out with this, I used to be on podcasting and YouTubes, and I'm trying to get out to the masses to help you guys understand what's going on with real estate. So one thing before you pull the plug or turn that dial on putting in your application for a home loan. Or if you're even looking out there for a car loan, I'm going to give you some advice. Here's what happens when you go to a lender. They pull your credit if you're looking for a car loan or a home loan. That data from the credit agencies sells your data to a whole bunch of different entities. There could be up to maybe 50 different companies buying your data. So then what happens is they're going to call you, start emailing you, start mailing you, and it's going to be repetitive. And there might be 20, 30 companies trying to call you. You want to get out of that. You don't want your data sold. Go to optoutprescreener.com. You're just going to scroll down. It's not a site I created. Credit agencies created. So your data won't be sold. And what that data is called and that transfer is called trigger leads. So get out of the trigger leads and just take that advice if you would, unless you want to be called by about 50 other companies. So how do you reach out to me? So the best way to do this, I love to talk to you. I would love for you to give us a call so I can talk to you over your scenario, but there's 3 ways you can apply. First is right up through there. You can put in your application. Pretty simple. You plug in the data, and then what'll happen is I'll get an alert, then I'll get you on the phone, and we'll discuss what you're looking to do. What we like to do is, if you can, schedule a consultation. You're going to click right up through there, schedule a time that's available to us. Or if you want to jump in the front of the line, and I'll teach you a trick here, scroll down to the bottom of the website right through here, and this is going to give you our 800 number as well as my email address. And folks, if you have a question in regards to a mortgage, you're looking to buy, you're looking to refinance, you're looking to maybe invest in your first investment property, send me an email, dan@therateupdate.com. Give me your information, give me your story, give me your name and phone number. I'd love to call you, go over your scenario and probably other questions that you might have. So that's what we do here. Love to be able to talk to you. Love to help you. Again, we're licensed in all 50 states as well as Puerto Rico, and we can offer you one application, one credit pool, and shop your loan over 30 different lenders. So who else can help you with that? I'd love to be your mortgage loan officer. So check it out. Thank you for watching. God bless. And please, if you haven't subscribed yet, you can do that right down below. Take care. Have a fantastic evening. See you back here tomorrow. Bye-bye.